back, students, to Accounting 2401 Principles of Financial Accounting. This is Dr. Mercado speaking, and we are continuing with Chapter 2, which deals with analyzing transactions. In this particular lecture, we are going to be going over Exercise 2.8a, which deals with basically a short overview of how to record transactions in the journal and transferring the information from your general journal to your general ledgers. Okay? Like I stated earlier, please make sure that you have read the chapter before you attempt any of your assignments. And if you have any questions or concerns, do not hesitate to contact me. Okay, so let's begin with a short overview of what the specific problem is going to entail. This problem covers how to transfer the information from your journal to your ledgers. It is a long and tedious process once you begin having a lot of transactions. Now, in the real world, you're not going to be doing this manually. Okay, most companies, most larger companies, or even small and medium-sized companies use software such as QuickBooks that does all of this for you. Now, this does not mean that you should not know how to do it manually. Okay, we need to understand the logistics of how transactions are posted from your journals to your ledgers. That way, when the system does it for you, you can still go back and retrace your steps and know what's going on. Okay, so this is the manual process. This is what most computer systems, accounting computer systems, do nowadays. They do all of this for you. So basically, what we have to do nowadays is we record the transaction in the journal. That must be done. And then we just press one button, and that one button will automatically post your transactions from your journals to your ledgers. Okay, so it's a piece of cake. And for those students that are going to be taking computerized accounting, which is basically learning how to use QuickBooks, you will learn how easy the process is once we apply this to real life scenarios. But like I said, we still need to understand the steps that are taken by the system to be able to post these transactions to your ledgers. Okay, so after a transaction is recorded in your general journal, this information is to be updated into individual account ledgers. Okay, every account has a general ledger account, which basically keeps track of the balance for that one specific account. So if you have 100 accounts, you're going to have 100 general ledgers. Every account will have a general ledger. Okay, so every end of day after you do all of your transactions, you must go into the system and update all of your accounts and make sure that you are able to calculate the ending balance for each of those accounts. And it's very important that we keep all of our general ledgers up to date. That way we know exactly how much money we have, how much is owed to us, how much we owe to others. We need to have the ending balance of each of our accounts. Okay, so the process of transferring the debits and the credits from the journal to the ledgers is called posting. Okay, now there is an Exhibit 5 on your book that basically gives you the steps that need to happen when we transfer the information from your journal to your ledgers. So if you see at the very top, the first section is our journal. Okay, so we recorded one transaction, and then this transaction is going to be used to update your general ledger for your prepaid insurance account and for your cash account. Okay, so we have to record the transaction in the journal, and once we record the transaction in the journal, we update each of the accounts. Every account has its own account name and account number. Okay, and then at the end of the day, we balance, or we calculate the ending balance of each of the accounts. So step number 1 is basically we are transferring the information in sequential order by date. Okay, so you have to transfer every transaction as it occurs. So the first thing we have to do is we have to transfer the information, and we are basically just cutting and pasting. We are not making any changes to any of the information. We're just going to locate the information and transfer the information for that specific account to its specific general ledger. The first thing we do is we bring in the date. Okay, we need to make sure that we record the date the transaction occurred. Step number 2 is we're going to go ahead and we're going to bring in either the debit or credit information to the corresponding columns. Okay. Step number 3, we are recording our post reference. Our post reference on the general ledgers is your journal page number. Okay, so on the general ledgers, on the post reference column, you're going to enter the journal number. Okay, On the journal, you have to update your post-reference information. That's step number 4. And on your post-reference for the journal, you have to enter the account number for each of the ledgers. So if you posted this transaction for $2,400 debit to prepaid insurance, you posted that where? I posted that on account number 15 right here. Okay? So that is step number 4. And then step number 5 is to obtain the ending balance of each account. Okay? You will be doing this for every single transaction that you record. If you have 20 transactions, that means you're going to have approximately about 40 debits and credits. Remember, we usually have 1 debit and credit for each transaction. You have to transfer all of that information to the corresponding ledgers. Okay? So, you need to become familiar. You get the information from your journal. You post it to the individual ledger accounts. Each ledger has an account and an account number. And you have to basically, the purpose of this is to calculate the ending balance of each account. That way you can make business decisions. Okay? So I'm going to go with you over a process of how this is done. An example, that way we can understand. Okay? I'm not going to do this for 20, 30 transactions, but I will go through the logistics of one. So, it says here journalizing and posting. It says on February 11th, Quick Fix Company purchased $2,250 of supplies on account. In Quick Fix's chart of accounts, the supplies account number is 15 and the accounts payable account is number 21. Letter A. We have to journalize the February 11th transaction of Quick Fix Company's 2-column journal. Include an explanation of the entry. B. We're going to prepare a 4-column account for supplies. We're going to enter a debit balance of $400 as of February the 1st. We're going to place a check mark in the posting reference column. Letter C. We're going to prepare a 4-column account for accounts payable. We're going to enter a credit balance of $18,300 as of February the 1st. And we're going to place a check mark in the posting reference column. Then we're going to post the February 11th transaction to the accounts. And then letter E, do the rules of debit and credit apply to all companies? So we've got 5 requirements in this problem. Okay. The first thing we're going to do is we are going to record the transaction in the journal. Okay. Now I believe the information was provided where this is page 73. Okay. This is page 73 of the journal. Okay. So I've already created the journal. This is where we have our journal. Okay. Journal. Let me just delete this. Okay. So this is our journal where we're going to be entering our information, and it's journal page number 73. Okay. So we've got our journal here. So what happened on February the 11th? Okay. We purchased $2,250 of supplies on account. So you ask yourself, what did we buy? Well, we purchased supplies. Okay. By now, you should be comfortable journalizing entries. Make sure that you have that little map that I showed you in our prior presentation, which basically provides you information as to whether you need to debit or credit your accounts. Okay. So you need to follow that map to be able to figure out what needs to be debited and credited. So what did we buy? We bought supplies. Supplies is an asset account. The normal balance of a supplies is a debit. So if my supplies increase, I will be debiting my supplies for $2,250. Now, how did I pay for my supplies? It says on account. Whenever you buy something on account, that means that you owe money. If you owe money, that means it's a liability. The normal balance of liability accounts are a credit. Okay, so make sure that you refer to your normal balances of your accounts. So we bought an account, and the account that we have is accounts payable. Okay, we owe money. So my accounts payable is going to increase. Liabilities increase with a credit. Remember, you must have a debit and a credit for each account. And they need to balance. Okay, so this is what happened. Okay, we purchased supplies on account. Okay, so that's one entry that we have to record. Now, after we record this entry, we have to transfer this information to our ledgers. We're going to have two ledgers because we have two accounts being affected. We have your ledger for supplies, which is account number 15 that was provided to you in the problem. And we have ledger accounts payable, which is account number 21. So these are the two ledgers being affected by this transaction. Okay, now requirement A is to journalize. Okay, so we've already journalized it right here. Okay, let's put the A here. So we've got A done. We've already recorded. Now B is prepare a 4-column account for supplies. Okay, and we're going to enter a balance of $400. Okay, so this account has a beginning balance. Okay, as of February the 1st, we have a balance. Okay, they have provided us with a beginning balance. It says place a check mark on the posting reference column. Usually when we have a beginning balance, we're going to indicate that with a check mark. Okay, so we have the check mark there. Okay, and then it says that we have a debit balance of 400. Okay, so I'm going to enter. This is where I keep my balance. Okay, let me highlight this. This is where I keep my balance, is the last two columns. Okay, so if you see, we have a debit, a credit, a debit, a credit. The first two debit credits, or the first debit and credit columns, are for us to transfer the information from our journal. The second debit and credit columns are your calculation of your ending balance. Because this is our beginning balance from February the 1st, I'm going to take that over to my balance column, and it says that I have a debit balance of 400. Okay, so I'm going to put those 400 there. Okay, now they're asking us to prepare a 4-column account for accounts payable, which I have here. And they're asking us to enter a credit balance of $18,300. So this is happening as of February the 1st. Okay, this is my balance. Okay, we're going to enter the check mark as indicated in the post reference column. And my beginning balance, be very careful, it says it's 18,300 credit. Okay, now remember, accounts payable is a liability account. The normal balance is a credit. Okay, supplies is an asset account. The normal balance is a debit. So your balance for supplies should always be on the debit column. Your balance for accounts payable should always be on the credit column. Okay, so we need to know the normal balances of our accounts. So once we are done setting up our two ledgers, which we have, account number 15 and 21, we can post the February 11 transaction over to our specific accounts. So we're going to do first is we're going to locate the debit. You always start with the debit. Okay, the debit affects my supplies account. So we're going to locate our supplies ledger, which is this one. And we're going to go ahead and we're going to transfer the date. This is 2/11. Okay. Okay. For the item, we will not put a description. The only time you put a description is if it's the beginning balance, an adjusting entry, or a closing entry. Okay. If not, you leave it blank. So we're going to leave it blank. Okay. For my post reference, we're going to go ahead and we're going to copy, what journal page number do I have here? I've got journal 73, page 73. And I've got a debit of $2,250. So I'm going to put that in my debit column of $2,250. Okay. Now, supplies is an asset account. Okay. A debit will increase it. A credit will decrease it. This is where you should know the normal balance of the account. Now, supplies had a beginning balance of $400. Okay. I'm going to finish the whole supplies account from beginning to end. All of the steps, all of the 5 steps. Okay. So, supplies had a beginning balance of $400. Let me get my calculator out. This is a debit of $400. Okay. Now I have another debit of $2,250. If I have a debit, I'm going to add whatever is here. I'm going to add it to my balance. So I've got 400 plus I've got a debit of $2,250. That's going to give me a debit balance of $2,650. Okay. So my ending balance for supplies is $2,650. I started off with 400. I bought more supplies of $2,250. Now I have $2,650 in supplies. Okay. Now I am done recording this one transaction. I'm going to go back to my journal and I'm going to reference that I posted this transaction in account number 15. Okay. So this number, you're going to bring it to your journal. Okay. So what did we do? Let's recap. We brought in and we're only looking at supplies for now. What happened to supplies? I'm going to look at my supplies ledger. I'm going to bring in the date. Item, you leave it blank. You put in the page number of your journal, which is page 73. Now you bring in the transaction. Whether it's a debit or a credit, you need to put it in the correct column. In this case, we've got a debit of $2,250. I brought that in. Now I have to calculate my ending balance. I started off with $400 debit. Okay. Because I have another debit, I'm going to add based on my normal balances of my account. So that's going to give me a balance of $2,650 debit. Okay. The next one we have is our accounts payable. Okay. So accounts payable, it happened on February the 11th. Okay. The item is going to be left blank. Now, where am I getting that information? I'm getting that information from Journal 73. Okay. Now, accounts payable got credited $2,250. So I need to go ahead and I need to credit my account for $2,250. Okay. Now we need to calculate the ending balance. Now you need to know the normal balance of your account. Accounts payable is a liability account. A credit increases it. A debit decreases it. Okay. This is where you need to look at that map, that diagram that I had previously showed you. Okay. So, accounts payable is a liability, a credit increases, a debit decreases, okay, which is the opposite of the supplies. This is an asset, this is a liability, okay. So I'm going to get my calculator out, and I had a beginning balance of 18,300 credit, okay. Now I have another credit of 2250. Because I have another credit, I'm going to add that credit for 2250. And then that means I'm going to have an ending balance of 20,550 credit. Okay. Both of these are credit. Credit plus credit will give me an ending balance of a credit. Okay. So we're going to go ahead and we're going to get the ending balance of 20,550. That's going to go over here, 20,550. And that is going to be my ending balance for my accounts payable. Okay, remember to know your ending balance. Once you are done with your ending balance, we're going to go back to your journal and you're going to put the account number, which is account number 21. Okay, so this tells me that I recorded my accounts payable entry in ledger number 21. Okay, so basically we've already transferred both of my accounts into my two separate general ledgers. The key to understanding this is to know the normal balances of your accounts. You need to go back and learn the normal balances of your accounts. That way you know whether a debit increases or decreases it. So you must know what kind of an account is supplies. Supplies is an asset. Then you go back to your diagram that shows you the normal balances of your accounts. Supplies is an asset, and we know that the normal balance of assets will be debit. So anytime you have an asset, the balance should be on the debit column. Okay. Accounts payable is a liability. The normal balance of a liability is a credit. So my balance should always be on the credit side. Okay. After every transaction is recorded, you keep updating your balance. That way you can obtain the ending balance for your account. That way you can decide whether you need to buy more supplies, whether you need to make a payment to the vendors that you owe money to, all of that information. Okay, so remember to transfer on your post reference column on your journal. What you need to record is each account number where you posted it. On your ledgers, you need to post on your post reference column the journal page number where you got the information from. Okay, and then you calculate the ending balance for each account. So for example, for supplies, your ending balance is $26.50. The ending balance for your accounts payable is $20,550. Okay, and this is how you run or how you transfer your information from your journal to your ledger. Like I stated earlier, it is a tedious process if you do it manually. Now, thank the Lord, with all of the technology that we have a lot of softwares, and all of this is done for us with the click of a button. Okay, and we'll see that hopefully if you continue taking accounting courses, you will get hands-on experience on using software such as QuickBooks, and you'll see how easy it is for us to do that. But for this class, we are learning it the manual way because we need to understand what is happening behind the scenes. Okay, so we need to know and become familiar with transferring information from the journals to the ledgers. Now, the last part of the problem says, do the rules of debit and credit apply to all companies? Yes, they do. It doesn't matter what kind of a company you have, what kind of a business you're running. The rules of debits and credits apply to all companies. Okay? So that was basically a short overview of posting transactions from your journals to your ledgers. Okay? If you have questions or concerns, please reach out to me. And I hope you all have a wonderful rest of your week. Thank you.